Alright, yeah, welcome back to my channel, and like I always say, don't forget to like my videos, subscribe to my channel, and turn on the notification bell for more live updates. In our previous video, we looked at receipts and payment accounts, and in this video, we are also using the same transactions, but we are entering income and expenditure account. Now, there are little differences between receipts and payment account and income and expenditure account, which are one, you can still observe that in terms of the receipt and payment account, our receipt was on the debit side and then the payment was on the credit side. But in income and expenditure, we switch that principle. Our expenditure goes to the debit side and our income comes to the credit side. Then in receipt and payment account, it takes care or it takes charge of every expenses that are incurred by the organization within an accounting year or within a financial time frame, and then also takes charge of every receipt or every income revenue that is generated by that organization. But when it comes to income and expenditure account, they take care of specific income and specific expenses that were incurred by the organization within a given period of time. Now, it does not account for expenses incurred in acquisition of fixed assets. So anytime you see a fixed asset, maybe acquisition of fixed assets within an organization, it is not entered in the income and expenditure account, and balance brought forward are not entered in the income and expenditure account because that is a balance from the previous year or the previous accounting period. So we just focus basically on incomes or revenue and expenses or expenditure within that period of time. Now, coming down to entering our income and expenditure, we are not going to enter the balance from previous year. We'll just start from subscription from members. And subscription from members aids an income. It increases the revenue within that organization or per se as we are entering for the club. So our subscription comes to our credit side. And the subscription from members amounted to 8,300. Then we have electricity bills, which is an expenses. So electricity bills go there. Electricity, I have 3,000. Then we have donations. Donations from members and increases the revenue. So we have donations. And donations is 13,300. Then we have travel expenses, goes to our debit side. And our travel expenses is 600. Then we have motor van repairs. Motor van repairs is expenses. So we have motor van repairs. And that amounts to 1,200. Then we have new games equipment cost. Now, new games equipment cost this is a fixed asset. New games equipment is fixed asset. So it is not entered into the receipt and expenditure account. So we skip the new games and equipment cost, and then we'll go to renovations and repairs. So our renovation and repairs is an expenses. So we have renovation and repairs, which amounts to 800. Then we have expenses on dance group. Expenses on dance group amounts to 820. We have sales of ticket for end of year party. It increases our revenue, so it goes into the income column. So we have sales of ticket or ticket sales. Sales of ticket. Now, sales of ticket amounts to 5,400, and then we have rent. Rent is expenses. So our rent is here. Rent is 12,000. Then we add all our expenses together. Now, let me add all the expenditure first. Under our expenditure, we have 3,000. Plus we have 600, plus we have 1,200, plus 800, plus 820, and plus 12,000. And that gives us a total of 18,420. Then under our income, we have 8,300 plus 13,300 plus 5,400. That gives us 27,000. Meaning we are going to close with this. So this will give me 27,000, and I'm closing with this. I can as well just close 27,000. Now, our double lines. We have excessive income over expenditure. So how do we calculate the excess of our income over expenditure? We subtract the total of our expenses from the total of our income. Now, when there is an income deficit where we have excessive expenditure over income, we close there. But now that we have excessive income over expenditure, meaning that the club actually generated more revenues than they spent within that accounting term or within that confined time that we were given. So I have 27,000 minus 18,420. So excess income over expenditure is 8,580. So when we sum all of this together, they give us our actual 27,000. Now, if you are asked to calculate the total amount of revenue or the total number of income that is in the account of the club as at the end of the year, now that is when you bring your balance from previous year, which is 12,000. I can actually bring my balance from previous year, add it to 8,580. So I have 8,580 plus 12,000, which will give me 0851002. So the total income in the club as at 31st December 2020 is 20,580. That is if you are actually asked to determine the total amount of income or the total amount of money left in the account of that organization. Then we do this simple calculation where you add your balance from the previous year to your excess income over expenditure. Now that brings us to the end of our class in recording transactions into the income and expenditure account. Like I always say, don't forget to like my videos, subscribe to my channel, and turn on the notification bar for more live updates. Thank you.